I'm Charlotte McLeod with investingnews.com, and here today with me is Steve Barton, host of In It to Win It. Thank you so much for being here. Always great to have you.
Oh, thank you for having me, Charlotte. I love our talks.
Of course. Yes. Excited to get into it today. And where we want to start is with gold. So gold, I think fair to say it had a little bit of a lackluster summer, but over the last few weeks, it started to move again. So I want to ask from a technical perspective, does this move look solid? How is it seeming to you when you look at the charts?
Well, I'll share my screen here and we'll get right to it. So we've had a really nice pullback from the highs in gold, allowing us to get back in and take some of those profits, put them back to work. My initial downside target was 4,100. I think that was a little optimistic. We ended up getting down to 3,950. And I think that, as we were in this decline, I think there was a big, at least for me, there was a big thought that we may come down here into this range, into the 3,600. I think that's effectively, I don't want to say it's off the table, but I think the odds of us getting down to this zone now are essentially 5% or less. I mean, I think it's very unlikely. The odds of us coming back down here to 4,000 or 3,900, I think are maybe, we'll call it 20 or 30%. So I think we could definitely come back down here and have a touch and then a bounce. That would be totally in the norm. But I don't think that's the most likely. I think the bottom is in. If we do come down here and touch right there and get a bounce, that would be another great opportunity, just a second chance at what we had right back here. If that were to break, then the odds of us hitting this would go up dramatically, but I don't see that happening. So essentially, I guess, long story short, I think the bottom's in. It wouldn't surprise me at all if we get a little retrace here. We've got quite a bit of resistance around 4,800, and these bars here today are putting in kind of what we call like doji bars, where most of the trading is just kind of right in the middle. And that's usually an indication that it's probably time to have a little rollover. Also, if you go into the Fibonacci retracement, you take it from the top to the bottom right here, that 4,800 hits right around the 50% retracement. So I got to believe I'm not the only guy drawing that Fibonacci retracement on his chart. So I think there's going to be some profit taking around that. But yeah, much more optimistic than the last time we talked as far as like if you're long and you want gold to go up. I think essentially the bottom's in and on these pullbacks here, if you feel like you didn't buy enough back here, you'll get a second chance, I believe. But I don't like buying today. We have a daily RSI here at 73, 74. Generally speaking, if it's above 70, alarm bells should be going off in your head that, hey, you should probably be trimming here, not adding to your position. But on pullbacks here, I think is a good time to add to gold.
Well, you answered, I think, the main question that many people have been having over the course of the summer months, which is whether the bottom is in. I want to talk about that a little bit more because the last time we spoke, I think back in July, you had mentioned some more qualitative type of factors that we might look at to see the bottom. And that one of them was capitulation among investors. I wonder, did we ever really see that? I know you're pretty in tune with your audience. So did that happen?
Not to the level that I really would have hoped. So not as much as I would have hoped. No, there was some, moaning, I'll call it, but nothing like I was really hoping. I was hoping to see that the gold thesis is broken, words like, and I really didn't see that. I think we would have had to come back down to this range to get that true, capitulation, but I didn't really see it. No. Unfortunately.
Okay. Yeah. No, my sense was that we didn't really get that level of capitulation either. So interesting to talk about that. All right. So we want to look at gold heading into the rest of 2026, I think. So we covered the bottom. You mentioned we've got, I think, resistance you said around 4,800. How are the next months of 2026 looking, say to the end of the year? Is there a price range that you would expect to see for gold in those months?
Last time we were on, you asked me about a seasonality chart, and I looked through some of the ones that they have here on TradingView, and the main hangup was that they accounted for 365 days, but there's only about 252 days of trading action that we see here on the charts because it takes the weekends off and holidays and stuff. So anyhow, I had to write one, and well, that's not true. ChatGPT wrote one for me, and I finally figured out how to plug it in. And so this is a seasonality chart of gold. So on the left here is January and to the right is December. And we can see if we're right around here. I'll draw a box for you. We're right around here in August. So if over the last this is taking from 1975 all the way to present day, added those up and then basically divided by the number of months, and we can see that here from August into October is generally up. So I would anticipate that unless this time is different, that's probably what will generally happen with the prices. We're going to have a price appreciation with a little pullbacks along the way. And this is where I'm saying, like, I wouldn't be buying today, but maybe we have a little pullback here in the next couple of weeks or so, and that would give you a better entry. Maybe instead of paying $4,700 for gold, you get it at, 43 or something, So I would expect that we'll probably move up into October and then have a little correction down here in November and then another spur at the end of the year, which is maybe influenced by Chinese buying into their new year. But that's what I see for seasonality going into the rest of the year.
Well, thank you for putting together the seasonality chart after I asked about it. I think that's really helpful for investors and for me to look at. So this is how it applies to gold. Does it apply to any other metals? Have you looked at it for other commodities?
Yeah, after I made this, I started flipping through every chart I had and looking at it. And so I'm glad you brought this up. I was a little embarrassed that you asked me about seasonality. And as a chartist, I couldn't pull up a chart on seasonality. So here we've got one here. On silver, about the same. Okay, so if we go from, August, probably a run up here over the next month and a half or so, sideways action going into late November, early December, and then a jump up. So kind of following gold there. One that's really interesting here is uranium. Now, the time on this is not the 70 or the 50 years that we have on the precious metals. This one goes from 2007. So this one's only 19 or 20 years, but we can see that there's a definite seasonality here in the summertime. So, you've interviewed Justin Hune just like I do every couple of months or so. And he was basically forecasting this right here, that during the summer, we're probably going to get a pullback in uranium. And that's exactly what happened. And this is exactly where we were buying on that news. Now I've got a chart to prove it. And here's the run up, right? So we're kind of in late August here. And then we've got a pretty good price spike coming, I think, in uranium. So I really like getting some uranium equities right now. You're not going to be able to get them quite at the bottom that we had recently. So if I go here to URNM, I don't think you're going to quite get into this. This is a limit order I have down here. That's probably a pipe dream now. You have missed some of the move down here, but I still think we have quite a bit of ways to go here on uranium.
I do remember we had talked about that uranium pattern that seems to play out year after year. So you might have missed the exact bottom over the summer, but there's still time to get in. And if all goes as it usually does, people would want to start thinking about selling in the fall their uranium holdings. Is that how it's looking to you?
Maybe towards the end of the year. I don't necessarily know around the fall. I think around this is the time that we should probably be buying it. I do have some uranium juniors that I'm actually trimming right now because this doesn't look too impressive on this chart, but when you get into the juniors, they can really, really move up and down. But this one is, I think we still got a little bit more upside. Today we're closing, we're probably going to close above the 200-day moving average on this ETF URNM. That's a pretty bullish sign. We are pretty high in the RSI here, but we've got volume picking up. I like, basically, the way I do it is I do these red, yellow, and green lines, right? And so as this gets cheaper, you buy more. So we're right now on the red line, which I think is okay for a starter position. Maybe, let's say you wanted to put $10,000 into URNM here. I think buying $1,500 today is fine, right? And then if we get down here to the yellow line, I think buying another $3,500, meaning you're 50% invested of whatever your target allocation is. Then if you get lucky enough and it comes back here down to the green line, which I do not think it will, then you do your final 50% slug. If you're doing a 10K allocation, you do 5K there. But I think now is okay to if you don't have any, to get a starter position, or if you wanted a little bit more, I think you're okay buying now. With the exception, it's probably going to have a little bit of pullback here, but out of all the charts that I'm looking at right now, I think uranium is probably one of the best deals today.
Okay, well, that's a pretty strong recommendation. So it probably makes sense for people to at least take a look at that. I want to go back to silver as well. You talked a little bit about silver. And last time we were speaking, you mentioned several levels of resistance for silver when it's on the way up. And one of them, I think, was $72, which is actually in sight right now. So is that still a key resistance level for silver? And what else are you looking at in terms of the white metal?
Yeah, 72 is still basically the number. If we look here at this dark blue line, that's the 200-day moving average. That's the moving average that every chartist is going to have on his screen. So that's going to be a pretty good resistance level. Right now, that's sitting at $71.56. Just north of that at 72, if I hover across here and basically put my cursor right there, we can see that there's a lot of price action around $72. See how it acted as support right here. There's a whole bunch of price action through it. Support, fell through, resistance. I got to believe that's going to continue to be the tough part to break through. So I do not see silver just rocketing up here to $80 or $90 in the next week. I think we're going to have to chew through a lot of resistance right here in the lower 70s. Yeah, that's going to be the tough one right there. On top of that, we have high RSI, we have high MACD. You know, ideally, as silver investors, what we'd like to see is we'd like to see another one of these, which is a bull flag. Okay, if you have your position and you don't want more, you want to see another one of these, and you want to just see this go sideways so that it can kind of build pressure, allow some of the RSI and the MACD to roll over and maybe get a little bit lower before this moves up higher. I think that's probably the most likely scenario, is that we just get a little sideways action here, but I don't see us blowing through 72 here in short order. I think it's going to take a little bit of work.
Right. And we talked about the bottom for gold. For silver, I have to imagine that $50 to $54 per ounce level is still the main zone of support, but how are you seeing it?
Yeah, I don't think we'll get back down to there. I was putting the floor before around, I think, the floor around 50, give it a little grace down to 48 or so. Now I'm thinking we've probably already put that floor in, and it basically got down here to, 55, on the futures contracts right here. So on the dot, actually. So I think the floor is officially in. I don't think we're going much lower than that. For us to get below and to hit that 5% mark that I was talking about, I think we're going to have some type of global liquidity crisis where, banks are having to sell their gold to, countries are having to sell their gold. I just don't see that happening. I don't think it's likely, but anything could happen. So there could be a global liquidity crisis. And if that happens, silver's probably going into the 40s and gold is going to go down to 3,500, but I don't think that's likely.
Yeah, I know. As you say, anything can happen. So we'll see how that plays out. I want to at least briefly mention gold and silver stocks. So we've seen the prices for the metals starting to move higher. How have gold and silver stocks responded to those moves so far?
Oh, it's been impressive. It's been a lot of fun. So if you're buying down here on the green line within 2 weeks, you're just up and kind of wondering what happened, right? So here is GDX. It's up 40% here in, 3 weeks. Have a little bit more to go. I've got my first trim target here for GDX at 115. So if you're buying at 75, we could get to 115 here pretty quick. That would put you up at over 50% profit inside of a month. I don't think it's a terrible idea to take profits around there. I'm not suggesting at all by selling the whole position. That's not what I'm saying. What I'm saying is, maybe trim 10%. That could be money that you could take and rotate into the next thing, like uranium. Or you could simply keep it as cash, and maybe we get a little pullback here in these miners. Most often what happens on these chart patterns when you make like highs like this is there was some Johnny come lately back here that was buying up at these levels. Like when you look at the volume here, there's a lot of shares that are tied up in people that, maybe they just bought because they saw it in the news. I think they're going to want to sell around there. So when the price action gets up in this zone right here, I don't think it's a terrible idea to take profits around there. Because I think there will be a little bit of a hiccup. I kind of doubt we're just going to blow right through that. Maybe we do, But more often than not, it'll usually create like some type of double top. Maybe you get some kind of cup pattern forming with a handle, and that's where you can get back in. Or since you had such a run up so quick, you can rotate it into something else if you want. But that's basically what I'm seeing on GDX. Here's SIL, same kind of thing. Not quite as much. I mean, if you got down here on the lows, well, yeah, I guess around 40%. Same thing, trim target at 115 here for SIL. And, I'm not suggesting to sell the whole thing by any means. I'm just saying that, you were right. Pay yourself a little bit, take some profits, 10, 15%. I don't know that I would sell much more than that though. I think these have a really good run.
Yeah, I think that gives us a good idea of your line of thinking right now. And on that note, it's going in a direction that I wanted to go. So earlier in the summer, when gold and silver prices were lower, you're talking about how you're getting positioned. Are you allocated the way you want in terms of gold and silver right now? Did you get a chance to put your positions the way that you want them?
Yes and no. I was really hoping for a pretty radical sell-off. Let me pull up one company just to kind of emphasize what I was getting at when we were talking in Boca Raton. This is Royal Gold. So this is one of the ones that I was really like, as it was getting cheaper, I was extremely excited. And some of my cheaper ones, my stink bids did hit, but we didn't get that real sell-off that I was hoping for. I had some limit orders down here on this one for 170, just lining up back here. Didn't get it. If that had broken, I would have gone down and probably, this would have been a 2% position. I probably would have gone down and bought another 3% if it got down here to 150. So I didn't get that real sell-off that I was hoping for, but I was able to allocate into a lot of these. And, but I still ended up having 14, 15% cash at the bottom of this. But had we gone down to this 170 level or even lower here, I'm just using this one company as an example, I probably would have gone down to maybe 5% cash. And if it had gone down to here, I would have been at zero. It was a real opportunity on these. And, that moment's passed. But I think we're probably getting a little stretched here, a little ready for gold to take a breather. And I think some of these are going to take a breather as well. So, keep an eye on them, but I don't think today's the day to buy.
Okay, I think that helps a lot. And I want to make sure to bring up copper as well. We've talked about copper, I think, pretty frequently in the past. And while gold and silver were kind of having their summer doldrums, the copper market seemed like it was heating up and continues to do so. I'm seeing copper tariff headlines. So I wonder if we take a look at the copper chart, how is it looking for prices as we move forward? What do you see?
Well, this is a pretty bullish looking chart. Just pretty much moves from the bottom right to, the bottom left to the top right. We have basically, I keep kind of expecting to get a little pullback here in copper because of, everyone's been talking about that we're going to have a recession for the last 4 or 5 years, myself included, and just hasn't seemed to happen. And the chart just keeps trudging up. So, basically the way I've been treating copper is on any of these pullbacks, I'm buying copper companies. And ironically, the copper price is, up at essentially all-time highs, right? So we're all-time highs here on the 1 month futures contracts are $6.87. Yet a lot of the copper equities are not at all-time highs. So you can find some copper companies that are relatively cheap. And I was asking Rick about this yesterday, and he seems to think that investors are expecting the recession that I'm talking about and expecting copper to get hit, and it just hasn't. So I think maybe the fundamentals on this are that, we are electrifying the planet. Where if hyperscalers really have the issue, the demand that they're forecasting, we may not get a pullback in copper, even if we do get a recession. Short term here on the charts, basically what I see is we've just gotten support. So we had this is essentially a short term bearish chart right now. I hesitate even saying that, but we've got a topping tail right here. And until we get a daily close of the copper price that exceeds that $8 or $7.87. So you basically need a candle like that, the bar part, to fill higher and close higher than that. And then that goes away. So in the very immediate term, this is semi bearish, but I'm not being discouraged by that at all. There's a little parallel channel right here that's kind of been obeyed. We're inside it. I think we're still moving up.
Really interesting note on the copper companies and why they aren't following the price higher yet. So it sounds like maybe they'll start to move once people start to believe that the copper story really has legs and it's not going to take that step back. Or how are you seeing it in that case?
I think if you get a daily close above this topping tail, you can kind of hold your nose and buy. The copper companies. I'm not saying going long on futures contracts on copper. That's not what I'm saying. I'm saying, get into COPX. This one is getting kind of close to all-time highs here. So maybe I'm kind of poo-pooing on my own point. But when you get into some of the specific companies, they're not. And those are the ones that I'm talking about. Like once you get a close above right here, I think that's when some of the algorithms are going to start like, okay, we've hit, in copper, we hit an all-time high. Then we hit another one. Then we double top. Now we got a new one. Now we've got a daily and maybe even a weekly close above this all-time high. I think that's kind of when some more institutional money will start coming in. It's just a guess, but I think that would be a big clue for them.
Yeah. I'll take a guess on that from you for sure. I wonder for copper in the long term. I know the long-term story for copper has pretty much for years been talked about as being good, but now I'm starting to hear some very high price predictions when we look longer term, 5 to 10 years into the future. So I wonder what you see coming for copper in that time frame. Is there anything that we can project out that far?
I mean, I'm probably just going to defer to Robert Friedland and his $8 call. I'll piggyback on that, man. He's forgotten more about copper than I know. As far as on the charts, what we could do is we could do what's called a Fibonacci extension. So we'll take the lows here from the COVID sell-off, line it up here with the highs, and then watch the pullback right there. And if we string this out a little bit, that could give us a decent target. I like to look at around the 100% move, which has already happened. That was just north of $6. And then after that, a pretty, what's it called? Like a pretty likely target is around the 1618, which is just north of $8. So that's kind of where my base case is that I expect that we're going. I'll piggyback on Robert Friedland there. And then going on the charts here, since we've already hit the 100% move, I think it's very likely we're going to hit up here at the $8 target. I don't know. How much longer would it take if you just project that? If you project this out, let me just do a general trend line. And we'll take it from down around here. We'll call that about the average. When does that take us up to $8? Around there. And that would be around... maybe 2029, something like that. Slow and steady wins the race. That's where I see it going.
Yeah. Thanks for humoring me on that one. And yeah, I think it's interesting to see how that can line up with the Robert Friedland prediction. Okay, so we've covered a number of areas that we usually talk about. You had also mentioned before we turned the camera on, so uranium is a pretty key area of interest right now for you. Also looking at platinum and palladium as potential areas of buying opportunities. So can you share what you're seeing there?
Yeah, I'm getting excited on these again. So we're buying platinum and palladium down here. We just had that monumental spike up, and luckily I had a guest on that warned me how risky this bet was, and I literally sold within a few days of the top. And then since then, we've just been putting in this downward trend here in the PGMs. Coming up on a very interesting point right now for platinum, and we can see this white parallel channel right here, right? So definitely trading within that channel. I like to have at least 2 points on the top and 2 points on the bottom for it to be a valid parallel channel. We've got 1, 2, 3 coming up on 4th right now for the top, right? So maybe not everyone has this parallel channel drawn on their charts, but I gotta believe everyone sees this same trend line right here. So I think we're at a really pivotal point right now for platinum. And it looks like it's getting rejected down here. I wasn't sure if it was going to break through this 200-day moving average and this 150-day moving average and the parallel line, and also price action going back right here. There's a lot of resistance right there around 1900. Looks like that we've come up, touched it, and we're probably going to get a little bit cheaper. So if you want, a speculation, I think you're going to get one here in platinum. If I'm right, and this continues to go down and get cheaper, I really like the $1,700 level as basically a starter position. Okay. And then 1,500. And then I don't think it's going to get down here to 1,300. But if it did, I think that would be a smoking deal. Yeah, platinum's looking pretty good, with the caveat that I think we're going to have a little correction here. But these downward trend lines eventually get broken to the upside unless the company or whatever goes out of business. So watching for that point and watching when it breaks out of this white line right here, I think is going to be kind of your okay, the train has left the station. It's happening. Moving on to palladium. I think it's kind of already happened. So we basically had the same downward channel trend line right here, and we broke out of it, kind of like we did recently with gold. And now we're just trading sideways. This really looks like a bottoming pattern to me when I zoom in here. And if you look at the price action, okay, see how it goes down. Let me take some of these drawings out. There we go. Okay, if you look at the price action and look at how the price went here, and then the price went even lower. Now look down here at the RSI. And this is kind of a crystal ball method right here is as price is going lower, but the RSI is actually going up. See how the RSI over here, if I look at this part right here, was at 27. Then if I zoom in over here, it's at 31. Okay. So RSI went up, price went down. That's what we call a positive divergence. And that almost always points to higher prices, which is exactly what happened. Now the price is starting to move up here, right? So I think we've essentially put in a bottom here in palladium. That's what the charts are telling me. And it's giving us a second shot here to get in. This is a correction in time, I think, in palladium here. And I think the time to buy is now if you want a speculation. And we're in between the red and the yellow line. So I think you're okay to have a 30% allocation of whatever you want on this. Personally, I've got my next limit order. I bought this one right here. And then I'm looking to buy one more time here at 1250 and basically have a full position there. Hasn't quite gotten there yet. Sometimes I get a little too cheap and I end up missing it. So what I probably should do is just get my allocation today. But the cheapskate in me wants to wait until 1250, which may never come. But I like that level a lot for palladium. And I think you're okay to start speculating now on both of those metals.
And can you remind me the vehicles that you use to get exposure to platinum and palladium? Because they're a little bit more unusual than gold and silver.
Yes. The platinum one, the ticker is going to be PPLT. So that's your mouse click platinum. That's by Aberdeen. And then they've also got one for palladium. That ticker is PALL. You can also get into some of the platinum and palladium miners. There's, I think, plenty of risk, though, in just getting the physical metal. So, that's certainly not for everyone. Personally, I've got some call options on Sibanye Stillwater. I guess I do have a platinum and palladium junior as well in the portfolio, but I think you can get plenty of upside just playing the metal itself. If you really want to get into the weeds and play the miners, you can as well. But those are the two that I use if I'm going to be mouse clicking my way to physical platinum and palladium.
All right. So we've got some options there. Thank you for sharing that as well. And as we're getting to the end here, I'll ask if you have any final thoughts that you would leave our investor audience with. And we also want to mention your technical analysis course.
Thank you. Final thoughts. I think that I wouldn't get caught up in this gold and silver craze. We've had a really nice run here. Hopefully you were able to buy down here around the $4,000 level. I would wait for a little pullback on both of these. Maybe a little bit more consolidation here. Wait to see if it can break through that $72 level on silver or not. Copper miners are looking pretty interesting, but I think the play right here is going to be uranium. Watch and see this one. I think you're fine to take a starter position now. If you were not buying it, if you were buying back here when we're talking about it, then forget what I'm saying. You're in, write it. But if you're not, and you're new here and you're new to uranium, this is a really easy way to play it. URNM. It's a basket of uranium miners. You're not going to have quite the alpha that buying an individual like best company. But this is a really easy way to do it where you don't have to study the individual companies and you can just mouse click your way to do it. So I like uranium a lot right now. And then as a speculation, I really like platinum and palladium right now. I think we're generally at the bottom end of the chart on that. Close enough. And I think you're good to buy there. As far as technical analysis series, I put together a technical analysis for beginner series. It includes more than 3 hours of step-by-step lessons covering everything from moving averages, RSI, Fibonacci levels, and chart patterns, just like you've seen here. I start with a blank slate. So I literally start with a black screen and I show you mouse click by mouse click how to set up your chart exactly like what you see here. I walk through real charts on this software's trading view so you can start applying it right away. I believe that the fundamentals tell us what we should be buying and selling, and these technicals can tell you when to buy and when to sell, so you can hopefully catch the relative bottom and the relative top. So if you want to learn when to buy and when to sell, it's helped a lot of people, and I think it can help you too. And Charlotte, if you could put a link down below, I'd appreciate it.
Yes, of course. We'll have the link below in the video description if people would like to learn more. And thank you as always for coming on to talk about what's happening in the markets. I think as usual, very actionable advice that investors can take a look at.
Oh, thank you, Charlotte. I love doing this. This is fun.
Of course. Well, looking forward to next time. For now, once again, I'm Charlotte McLeod with investingnews.com, and this is Steve Barton with In It to Win It.